In the note business, when you're buying existing performing paper, you start earning interest the minute your money lands. This is a property located in Antioch, Illinois. We originated this loan. We originated in May of 2004. This one just paid off 3 days ago, so this paid off. Interest payments and fees received $5,606 in 10 months. We wrote the note at 9.9. We sold it to another investor for a 9% yield. And 7 months later, they got their money. They got all $91,000 back. They made $5,600 in that 7 months. They effectively made a 9% rate of return on their money for the period of time that it sat in that note. Now, here's another deal. We closed this one May of last year. This loan paid off in October. The loan amount on this was $700,000. The interest rate, so we sold this to an investor, and that investor was getting 11.99% on their money. 11.99%. Now, remember, I told you guys you can go put your money into a bank account right now, an interest-bearing account. You might getting in 1.5. You can put it into a CD, getting 2, 2.5, 3. If you put it into a 5-year CD or a mutual fund, you can get 4, 4.5. But if you put it in a note, you're getting 11.99. Secured against real property. By the way, guys, that's a $700,000 note on a property that appraised for $1.4 million. That's a 50% loan to value. The investor made $35,000 in just 5 months before that loan paid off. Here's another one in Lake Charles, Louisiana. We funded this deal in October of 2023. It paid off September of 2024. We lent them $187,500. We sold the note to another investor at $9.75. They earned $35,000 in the 19 months that their money was in that deal. Now, a lot of people always think it's funny when I say this, but what is the worst day in a note buyer's life? What is the worst day in a note buyer's life? The answer, when their note pays off. Here's why. Let's say that this was your $187,000, okay? You find a great note secured against real good collateral, and the borrowers are making all of their payments on time, and you're getting, what is that? If we take $35,000, 35, 8, 35, 19 divided by 19 months. Okay, they were getting $1,800 a month, almost 10% on their cash, $1,800 a month for 19 months. And then suddenly, here comes my $187,000 back into the bank account. I'm not getting $1,800 a month anymore. So now I got to redeploy it. I got to put it back out into the marketplace. I got to find another note to put it in. Which is why, you guys, we've been buying and originating and selling notes for over 20 years. I have clients, and I'll show you this here in just a moment, that have bought so many loans from us that when their money comes in, that $187,500 lands in our servicing department, a lot of them are just like, just keep it there. Let me look at your notes. And okay, let's put it on that note. Let's put it on this note. Let's split it, put it on 2 notes. Let's split it 4 ways, put it on 4 notes. There's a lot of different strategies and structures to doing this, but what I want you all to understand through it is every single one of you can be involved in the note business, either as a direct buyer, as an originator, as a broker, as a facilitator, as a partner. Every single one of you can be in the note business. It is for all of you, whether you have any money or not. Look at this one. We wrote this note in April of 24. It paid off in September of 24. The investor bought this note for $210,000. They received 13.99% secured against that beautiful brick property in Alabama. They made $13,000 in 5 months. Now, think about it. If they would have bought that, first of all, that building's worth $350,000. So you're not buying that property. And if you did, you now are responsible for paying the taxes, the insurance. You would have to come up with $350,000 or get leveraged debt to do it. You would be responsible now for tenants and toilets, fixing it up, cleaning it up, which means if you don't live in Birmingham, Alabama, you're probably not going to do anything with that particular property. But when we're buying notes, we don't have to live anywhere near the property because all we're doing is just servicing the debt, collecting the payments from the borrower who is in Birmingham, Alabama, who is putting $80,000 down to buy this property, who is overseeing tenants and toilets and collecting the rents, because that's what they have to do to make sure that they pay their mortgage. So if you don't pay your mortgage, you get foreclosed on and you lose your property. So the thing that I love about the note business, in addition to everything else, is we can do notes nationwide. Now, you guys know, those of you who have been around for quite some time, you know that I only buy fix and flip properties in 2 counties. I'm standing in North Idaho right now, smack dab in the middle of Coeur d'Alene, Idaho, in a county called Kootenai. So Kootenai County, and then about 15 miles west of here is the Idaho border going into Washington, and that takes us into Spokane County. I only buy, fix and flip, and develop property in those 2 counties. However, I originate paper all over the nation. I service paper all over the nation. I sell paper all over the nation to investors who live all over the world, because notes give you the ability to do that. Now, it would be very hard to service these types of properties if you were buying them and sticking them with property managers. But when you're buying notes, you're at a greatly reduced risk, because we're only lending at 65 to 70% of the actual value of the asset. Many of these borrowers are putting substantial amounts of money down, and they've got great credit. So they're good credit risk, and it's a great deal for you. Look at this one in Carlsbad, California. Now, I inserted this one in here for 2 reasons. One, I mentioned we lend all over the nation, and a lot of people have this misconception that private money mortgage notes are only written in places like Mississippi and the Deep South, where getting bank financing is more challenging because the properties are in disrepair or they don't have foundations. Nothing could be further from the truth. A lot of people prefer to use private money lenders because they're self-employed. And so they write everything off. They don't claim any income on their tax returns. So they can't go to banks and get bank financing, but they still want to buy and own nice properties in nice locations. So reason number 1, I'm showing you this property in Carlsbad, California is, I don't know if you've ever been to Carlsbad, California, but it's a pretty nice place. Second reason I'm showing you this note is you don't have to buy whole notes. You don't need $620,000 to participate in this note in Carlsbad, California. Did you know that you can borrow, you can invest a portion of your money into this note? So let's say that you had $50,000 sitting in your self-directed IRA and that was it. But you love that this is in California. You love that it's an 11.99% rate. You love this collateral and you go, gee, man, I wish that I could get my $50,000 deployed into that type of a property. Well, you can. This is what we call buying a partial. Let me explain how this works, okay? If we take $50,000 divided by 620,750, which is the face value of the note, that gives us 0.0805. Now, what that means is for $50,000, you can buy an 8.05% interest in that note. Because when we originate these loans, you guys, through our private equity funds, we will sell a minority interest in $50,000 minimum quantities in any note. So you can go to my website at Secured Investment Corp, and you can simply shop all of our notes, and you can say, I like that one, I'll put 50 grand in that note, and you can be a minority owner of the note with us. We retain 51% ownership so that we can still control the foreclosure if we need to, the collection efforts, we do all the work, but you can purchase a minority interest in that type of a deal. You can also broker a minority interest in that deal. How would that work? You've got an investor that's got 50 grand laying around and you say, well, hey, you know what? I could get your $50,000 secured in first lien position on a property in Carlsbad, California, and I can get you 8.99% return on your money. And you're going, wait a minute, Lee, that's paying 11.99%. I know it is. But if you sell them the note at 8.99, you keep the 3% spread, okay? Now, this is what we call yield spread premiums. So you simply sell them the note at a reduced rate of what the note is paying. And then every month when a check goes out, They get paid their 8.99%, and you get paid your 2.99% for that yield spread premium, okay? So we've covered a lot of strategies here in this one little deal. We've covered selling a partial, and we've covered selling at a yield spread premium where you're getting a check every single month because you sold the note at a discounted price. Wasn't your money, wasn't your deal, wasn't your house, wasn't your mortgage. That's why I'm telling you guys, every single person watching is and should be, if you're not already, in the note business, even if you have no money. Now, I'll tell you this. I went to my first real estate investment training in 1996, and I started flipping houses in 1996. In 2001, I came upon and started learning this whole debt space note business. And in 2001, I brokered my first private money loan. It was a $25,000 loan, and I made $1,500 helping a lady get 25 grand to fix a boiler in one of her apartment buildings. I got paid $1,500 for making an introduction. And I went, hey, this is cool. I can get paid for not having any money without having to buy any real estate, simply by knowing people who need money and connecting them with people who have money, and I can get paid in the middle. Guys, from that first deal, I was hooked on the note business. I love it. And since that time, we've originated almost $1 billion in private money loans. We're servicing thousands of mortgages nationwide, and we do it all with none of our own money. It's other people's money, because we are presenting them with an opportunity to earn really great rates of return on their cash, secured against really great properties in cities all over America. They can simply go to our website, choose the state they want to invest in, decide how much of their money they want to deploy in that particular note, and just start receiving monthly income automatically. If you right now buy $50,000 in that note right now today, you would be buying the next, for the month of January, you would be buying the payments from the 7th to the 30th, so we would prorate your payment. So the minute you buy, or the minute the person you brings to us buys, they immediately start earning interest on their money. That is not true when you buy real estate, because when I buy real estate, I usually have to fix something. If I don't have to fix something, I have to market it. I have to find a tenant. I got to get a first and last months. I got to get a security deposit. They have to move in. They have to take possession. I'm usually 8 to 12 weeks out from the time that I buy a property to the time that I'm getting paid and earning a return on my money. In the note business, when you're buying existing performing paper, you start earning interest. The minute your money lands, you start earning interest.